All right, hey guys, just before we get into this week's market analysis, right after we finished recording, Bitcoin went boom. Climbed $300 in a couple of minutes, and it's looking really positive. We've decided to keep this week's analysis rather than re-record. We feel there's enough good material, but we will play a short voice note from Graham, and we'll share a little chart as well that he's just sent through. So let's take a listen to what Graham has to say right after this big green candle that we've seen on Bitcoin.
Hey James, well, not even an hour since we pushed stop on our recording, and sleepy Bitcoin has suddenly come to life. And I'm looking at the hourly chart here, and we've got a really large green candle right now with some sizable volume behind it. So 7,400 was a significant level of resistance, and we've now clearly broken through that level. Look, we have to wait and see if this move can sustain itself, but at least in the short term, it's looking very positive. We're sitting at 7,550, give or take, at the moment. And if we can have a daily candle that closes above 7,400, then that will be very positive in my view. So we'll wait and see how this situation materializes. But yeah, we're looking pretty good here. That's a short update from my side, just for now.
Okay, so there you go. It's clearly exciting, but there's still some good stuff, some great principles, especially to learn as well. So enjoy this week's edition. Right, so welcome to this edition of Market Analysis with myself, James Preston.
And myself, Graham Tennant.
And you may be wondering what is happening here. I have a little fluffy pony. It's not mine. It's not Monero's either. It's my daughter's. But there is a little clue as to what's coming in the next week or two. So it's not just one interview, it's many. We have a very, very exciting series lined up. Stay tuned. Follow us on Twitter. Keep an eye out, and we will announce everything in the next 2 weeks. Right now though, Graham, wow, what a week it's been in the traditional markets. We saw the most incredible crash of the oil market, and it's quite interesting because 5 weeks ago now, we had the biggest one-day crash in value on the Bitcoin price of over $1,000. And a couple of weeks later, we see the biggest crash in the oil markets in history. Take us through what on earth happened and whether that's had a knock-on effect with the rest of the traditional financial markets.
Sure. Yeah, so like you said, fascinating things happening in our world of finance, whether that's the traditional space or the crypto space. Yeah, look, I'm not an expert when it comes to oil trading and the different products out there, but obviously that was the big story that hogged all the headlines in the last week was the oil story. And yeah, look, I think from my perspective, I can give you a little bit of insight, but like I said, crypto is really my game rather than the black sticky stuff. So I think a couple of things to keep in mind is that you've got two types of oil. So you've got Brent crude, which is predominantly UK based, and it's your European oil, and then you've got your WTI oil, and that's really the contracts and that specific type of oil where all that stress was. And I think it was really more of a localized crisis than a globalized crisis. So that was, from what I understand, it was producers and distributors of oil that ran out of storage space, and obviously oil is big and heavy, and you have to put it somewhere, so they're basically paying people to take it off their hands. But we didn't see the knock-on effect of that particular crisis on the financial markets as a whole. So you would have found that oil stocks and FX markets that are driven by oil, like your Russian ruble and like your Canadian dollar, didn't reflect the same type of crisis in their price than what was experienced on the WTI markets. So I think that's important to understand, is that it didn't have a wide-ranging knock-on effects, at least not yet, to other parts of the financial world.
All right, now talking about traditional financial markets and their correlation to other markets. We spoke earlier about oil and its correlation to the foreign exchange markets, such as the Russian ruble, the Canadian dollar. The S&P 500 has been showing an interesting pattern in relation to Bitcoin. Is that just sort of mystical hope that some chartists have been looking into, or is there genuinely a correlation between the two at the moment? What are your thoughts?
Yeah, I think there is a correlation, and it's a correlation across what we call risk assets versus non-risk assets, or risk on versus risk off assets. So in your most obvious scenario, there would be stocks versus bonds. So your US Treasuries are risk off assets. So when we had our big plummet in March on the stock market, we had funds moving into bonds, which appreciated in value. So that's your direct difference in correlation between those two assets. But Bitcoin at the moment, because of its speculative nature, is also being seen as a risk asset. At least that's what the market is telling us. So when we see sell-offs occurring, and obviously your dollar is the risk-off asset as well there. So you're seeing money move into dollars or move into bonds. That's your safe play, and it's moving out of risk assets. And at the moment, Bitcoin is being lumped in with equities and property and other risk assets at this point in time. So I think that's why you see the correlation. And we've seen the S&P grinding up, and hitting some and having some issues getting through the current levels that it's at. And we've seen something happen with Bitcoin. So it had a really nice V bounce, and now we've started to hit some resistance, and it's kind of running out a bit of steam, and the same can be seen in the S&P. So I think that's that correlation that you spoke about. And at some point, we have plenty of people talking about the decoupling. So when Bitcoin decouples from other risk assets and obviously continues to rise higher while others stay behind, and we wait for that moment. And I think that it will most likely keep us waiting longer than we would hope for, or longer than we expect. So I'm not holding my breath for that to happen, today or next week. But at some point, I think it will be the case. But we remain to see when that event occurs.
All right, now let's finally get into the Bitcoin price at the moment.
Cool.
We've spent a lot of time on traditional stuff, which has been very interesting and valuable, but that's primarily because there's not much to talk about with regards to Bitcoin. Tell us why.
Okay, so this is the weekly chart. If you zoom out, you'll get the bigger picture there. So I think it's important, especially when you have these quieter times, to take a step back and say, where actually are we on the bigger time frames? And here you can see that this was the big sell-off that we had in the middle of March, and we then had this V bounce, and we went all the way down, even sub 4K, and we bounced up with quite a lot of impulse, and now we're running into the traffic, into these resistance levels that we're having at the moment. And I think that the higher probability outcome here is that this is a retest of previous support, which is now turned resistance, and that's why I have a slight bias towards us seeing a down leg from this point in time. And I think that what I'm looking for, if we do have that correction, is that we get a retracement of the Fibonacci level when we do get that pullback. Sorry, just give me one sec. Or rather, if we get that pullback. And I mean, broadly speaking, if we get a 38.2% retracement, that'll take us around about the 6,000 level. And I think that could be quite a healthy retracement. It will allow us to take stock and then pull back and then build up some more steam to try and break through this 6,800, 7,000 odd level that is giving us all the kind of problems that we're having right now in order to move higher. The other potential that we have, I'm going to go into a lower time frame chart here, is that we do hold above the 6,800 level, and we do form some kind of continuation and then move even higher from this point. And I think that would be your most bullish scenario. So, but look, having said all that, that's very speculative. My bias to the downside is only very slight, and at the moment I'm just not seeing any tradable setups. So I'm really waiting for the market to move into a position that it wants to show me that it's either wants to move to the upside or to the downside. And until it's giving me those kind of indications, I'm quite happy to sit on the sidelines and wait it out. If you are looking to buy for longer term investment, I think it's worth being patient. See if we get another dip to maybe around the 6,000 level. That could be a good opportunity for you to push some funds into the market for longer term accumulation. So yeah, that's really where I stand right now on the Bitcoin price.
Graham, just to talk about trading principles very quickly, you mentioned off camera before we went into the recording that you didn't want to trade oil because a lot of people, and even you said you were tempted to buy oil because it was so low. And then this Bitcoin chart as well. So just these two principles here, you don't want to trade it because you're not seeing a setup. Take us through the importance of sticking to principles as a trader.
100%. So I think the old cliche is put a trading plan together and trade that plan, or trade less and make more. So it's 100% spot on there. You have to have a game plan when it comes to your trading as well as your investing, and then stick to that plan. So for example, with the oil price here, I mean, I'm not an oil trader, but when the price does go to zero, you are starting to scratch your head and you're saying to yourself, well, surely this has to turn around and it's at a bargain at the moment. But I don't, like I said, that's out of my trading plan and it's out of my expertise. So I decided, well, don't dabble in that, and you take that temptation away, and look at the Bitcoin chart and some charts that are more familiar to me. I think that's a good rule to just stick by, is that if it's not part of your plan and if that's out of your comfort zone, it's best to stay away from that. And if you are interested in trading something new, well, go and do the research. If you want to put on some trades, put them on at small positions. But I think it's a pretty good principle just to stay away from things that are out of your comfort zone.
So take us onto that Bitcoin chart again, Graham. You at the moment are 50-50. It could go either way. What kind of level of probability do you as a trader like to sit at before making a decision, or rather making a trade?
So if I can say to myself, well, I believe this is a 60-40 probability outcome, then I'm happy to take that trade. At the moment.
And what would be your risk to reward ratio on a 60-40 trade?
So I'm looking for a risk reward ratio, anything 2 and above, at least 2. But typically I'm trading risk reward ratios above 5. That's really my sweet spot. And there, what we need is a contraction of volatility. So I've said it a couple of times. That's one of the main things I look for, is a contraction of volatility, and then looking to trade the expansion of volatility out of a specific structure. And right now you can see that even though we're moving sideways, we haven't had that real contraction of volatility. I want to see really small daily candles, and that gets me excited. And if I can say, well, we look more likely to break either to the upside or the downside of that contraction of volatility, then that makes me interested to take a short-term trade.
Right. Well, there we go, Graham. Thanks very much.
Cool. Thanks, James.
Yeah, we really appreciate it, man. There we go. That's quite a loaded episode filled with principles this week, and that's where we'll leave it. Of course, this little clue on my left here is going to give you an insight into a big announcement that we have coming up on SA Crypto very soon. Please don't forget to share this video with your friends and with your network. We sincerely appreciate all the support we can get. And that's where we'll leave it for this week. Graham, thanks again.
Thanks, James. Cheers for now.
We'll catch you guys in the next episode. Cheers for now.
SA Crypto is not a registered financial advisory, and the information provided in this market analysis is for informational purposes only. Each audience member is responsible for their own financial decisions, and SA Crypto cannot be held responsible for any decisions made by those within its audience. SA Crypto strongly encourages all audience members to consult a professional and registered financial advisor before making any financial decisions.